Chinese markets are higher today as the country's economy is showing some signs of improvement. Last week, third quarter GDP growth came in slightly above estimates, but this morning the IMF cut its forecast for China's growth. Our next guest says there are major risks and challenges that remain. Shaun Rein is founder and managing director of China Market Research Group. Shaun, always good to see you. Good to have you back. On a scale where 1 is flat and 10 is bubbly, where is the Chinese economy right now?
I'd give it a 1, Tyler. So as you know, I've been in China for 27 years. There are only 2 times that I've been really scared about a systemic financial risk in the economy. The first was in October of 2022, when we were dealing with the madness of zero COVID draconian laws in China. At that time, if you were considered a close contact of someone with COVID, you'd be sent away to a quarantine hospital for 15 days. So people didn't go out to restaurants, they didn't go out to shop because they were scared of having their family members taken away. The second time I've been very nervous was in August and September of this year. The business sentiment, consumer sentiment collapsed. So companies stopped hiring. That's why there's an 18.8% youth unemployment rate. Basically, Chinese youth are facing a lost generation. The second reason is it's very difficult to fire people in China. If somebody's been working in your company for 9 years, you have to give them 30 days notice plus 9 months of severance. So instead of just outright laying off workers, what companies started to do was cut salaries. They actually started clawing back bonuses from previous years, and they started demoting people. So what ended up happening, Tyler, is in August, September of this year, a very toxic, scared workforce permeated throughout the entire country. And that's why retail sales were only 2.2% growth in August, and everything hit a standstill. So the government had to launch a monetary policy, and that's why what I call a mini stimulus, but that's why you've seen the Chinese equity markets boom in the last 3 to 4 weeks, because the government realized
what has caused, Shaun, this collapse, if I may call it that, in sort of the economic animal spirits of the Chinese consumer? That's question number one. And when you say something like this, when you say that this economy is a 1 on a scale of 10, do you feel vulnerable to any, you have any fear of retribution or that somebody's going to knock on your door when you say stuff like that?
Well, I think everybody knows I tell the truth. And so I'm going to be very balanced and very objective on what the economy is. So it's a very bad situation, which is why I'm calling for the government to launch more incremental, targeted fiscal stimulus. We need to get not just the equity markets booming, but we have to get the unemployment market back working. We need to get jobs into people. We need to have reforms to help small business owners be able to feel comfortable that they can invest, because Chinese households have doubled their household savings, more than that actually, from 8 trillion to 20 trillion in the last 8 years. So there's still a lot of money in China, but we have to get those animal spirits back in order for the Chinese to go out and purchase fixed asset investment for companies, hire people, or to go out and buy more Nikes and Adidases and iPhones again.
If I'm a U.S. investor, and I am persuaded that there is a turnaround that will come eventually, where would you recommend I put my money today? Would it be in Chinese internet stocks or things that are more prosaic and closer to the ground, so to speak?
So the economy is bad, but because of the targeted stimulus, we start to see a slight upkeep. So in the medium to long terms, I'm actually quite bullish on China. Investors should be looking at the internet stocks, companies like Meituan, companies like Pinduoduo. They should also be getting the cheap consumption plays like Meidi, which is a household appliance company. They should be buying CATL, which is an NEV battery maker. And they should be looking at things like Luckin Coffee. So the trade down is still a really good play for investors to be looking at, because consumers are scared about the geopolitical overhang. To go back to your question from a few minutes ago, why is the economy so bad? In the run-up to the presidential elections, the Biden regime is increasing the number of sanctions and tariffs on China. He slapped 100% tariff on Chinese NEVs. He's trying to ban all auto software coming from China into the United States. So in August, September, in the run-up to the presidential elections, Chinese just got nervous and thought, we're going to be dealing with 20 years of oppression from America, so we're not going to buy big-ticket items.
Would the Chinese rather see Trump in office then?
I think in many ways, Tyler, they would rather see Trump, because I'll give an example. Trump said, I don't want to see Chinese automakers exporting to the United States. I want them to build factories in America and hire American workers. Now, Tyler, that's fair. That's what the Chinese did to America, to Ford and GM when they first tried to enter the lucrative Chinese market. So that's true reciprocity. Trump has also said that he most likely won't defend Taiwan. Biden on 3 occasions said he would defend Taiwan militarily. I think Trump is more likely to launch tariffs. So basically, I think Chinese would prefer to see Trump because they feel that he's transactional, business in nature, and a deal can be done. It's not an ideological fight between liberal democracies and communisms, which it is under Biden, and which the Chinese fear would be under Harris and Waltz. I mean, Waltz is a pro-democracy zealot that the Chinese are scared of.